September 2025. Were we ahead, behind, tailwind, headwind? What happened September 2025 versus September 2024? And in this, we'll also compare to September of 2020. For reference, 2020, 7 million plus homes sold in the United States. 2024, approximately 4 million. 2025, we're on pace for 4 million or under. So just as a reference point, significant decline in the amount of unit sales over 2020 to 2025, just for overall reference. So across the board, very consistent headwind on unit sales, headwind on inventory, which went down significantly. The only tailwind we saw consistent across all markets was prices continue to increase. They're not increasing as much as we've seen over the last 6 months, but we are still in all 4 markets we see. Prices continue to increase year over year, median prices. So remember, 4 markets we cover: St. Louis County, St. Charles County, St. Louis City, Jefferson County. Let's start with St. Louis County. Active inventory, current inventory on the market, September 25 over September 24, down 15%. But the bigger number is, again, going back to comparing it to September 20, it's down 31.5%. Unit sales, September over September, small decrease, 2.5% lower. But remember, when 24 was a down number, because when you compare that 24 to September of 23, that was down almost 15%. So we're down over that number from last year. So it's continuing to decline. Reference purposes, again, down 30% in unit sales from September of 2020. Here's where we talk, though, about prices. Median prices increased 12.2% September 25 over 24. And then even since those record-setting 2020s in unit sales, prices have increased over 32%. So again, highest level, active inventory down, unit sales down, prices up. St. Charles County, interesting, because in this market, we're seeing unit sales are down 4. And then from 2020, we're seeing them down 45%. Tells you how much new construction there was in St. Charles in 2020, 21. But then what's happened is we've seen some of the new construction really slow down because our unit sales, which we have not seen over the last few months in St. Charles, they're actually down. The other interesting thing is inventory. Inventory is down 12% September 25 over 24 and over 13% down from 2020. Again, not significantly down because there's still a lot of new construction and new inventory, but it is down. Prices, small increase in median price September 25 over 24. Big, though, increase, again, 35% increase from 2020 to 2025 in St. Charles County prices. St. Louis City. St. Louis City over the last 6 months has been really interesting. We continue to see unit sales down, prices stagnant but increasing a tad, and inventory really gaining just because inventory is building. But what we're seeing now, inventory is going down because inventory is coming off the market. It's not because they're selling through, because we are not seeing sell-throughs. We're just not seeing as many people putting their homes on the market in the city right now. This September 25 over 24 was down 27%. From 2020, it was down 30%. So your big decrease was in September 24 to 25. When you look at unit sales in the city, they were down over 12%. Bigger, decrease than we saw in St. Louis County, St. Charles County, and even when we get to Jefferson County, which happened to be up. Median price, though, here's the good news. In the city, prices for those homes that are on the market that are selling are up actually 10%. Interestingly enough, though, September 20 to 25, prices are increased 31%. Amazingly consistent that in St. Louis County, prices up 32% from 2020. St. Charles County up 35% from 2020. St. Louis City up 31% from 2020. And prices in Jefferson County up almost 40%. Amazing how consistent it is against four markets that are really completely different. So the good news for the city is those homes selling are actually selling at increased prices. It's not great for buyers. So buyers, you don't want to necessarily pick those best homes that are priced right, marked at the highest level, prepared for sale. There are other opportunities with the inventory that's happening there. There's other opportunities where you may be able to opportunistically buy contingencies and other. Jefferson County, consistent, active inventory, down 31.6%. We are seeing that market go down significantly in active inventory. Compared to 2020, down 46%. So almost cut in half the active inventory. Some of it is due to the new construction that was being built. There's not as much being built right now. And others is just what's happening in the market, because here's a good news. The only market that we cover where unit sales actually increased. We saw a growth in unit sales year over year of almost 7%, 6.8%, which is great news. And so when you're looking at what's happening in Jefferson County, inventory down, great homes are selling, and the market's actually responding and buying those homes because the unit sales are up. And then prices are up almost 6%. So again, you're seeing some increase in prices there. Overall, very consistent market. Tailwinds, headwinds. What do we see going into the fourth quarter? Very similar. We don't see any bump up in inventory. We see unit sales still being somewhat stagnant, and we see prices for those great homes that are priced right continuing to either go up or stay around that same amount. We don't see any significant decrease in prices. However, where we're going to see those decreases, if we took the overall market and broke it down based on days on market, how long the home's been on the market, where it started pricing, and how many price adjustments, I think we'll see some deterioration in those priced homes. Because again, sellers, you have to start out of the gate, price them right versus trying to catch the market. And so in this case, I also do not see interest rates, which we saw the interest rate change from the Fed during this update. But here's the thing, it didn't really have it didn't have an impact on interest rates, mortgage interest rates. Remember, the Fed, short-term borrowing, credit cards, car loans, and also commercial loans. But residential's off of the 10-year treasury, and we really have not seen much movement. So we're still in the sixes, mid to low sixes. I don't think we're going to see any massive changes in inventory and unit sales until we hit the fives, and I'm talking low fives. I just don't know when we're going to get there. I don't see it anytime soon. So if you're a seller, get your home on the market, price it right, prepare it for sale, market the highest level, and you have a great chance to sell. Overpriced, trouble. If you're a buyer, some great opportunities. Study the market. Watch what's happening. Some of those great homes you may not be able to opportunistically buy because there's still multiple offers and over asking on those. But here's your thing. Study the market. See the homes that maybe went into contract, fell out of contract, that have been sitting on the market. I think there's some great opportunities on those. Motivated sellers may happen. Also, as we get into the fourth quarter, sellers do not take your home off the market. You know, inventory is getting lower and lower, and it's proportionally lower than the amount of decrease in sales. So there's still active buyers. Keep your home on the market. Or if you're a seller with one of those great homes, get it on the market. It will sell in the fourth quarter. No need to wait till spring where there's increase in seller competition. And I'm not sure there's going to be an increase in buyer competition. Any questions about buying, selling, investing, don't hesitate to reach out.